Investors and traders, welcome to the channel Market Chart Pattern. Today is 13th of August 2023 and I hope everyone is having a great weekend. In this video segment, we are going to take a look at the key US tech stocks as we always do for this video segment. This video is for educational purposes only and it is not a financial advice. So we will start by taking a look at the stock of NVIDIA. This is the weekly chart of the NVIDIA stock. In June, a few months ago, we had done a video in which we had identified this pattern, ABCD pattern, and certain key levels that we were looking for, and we had some expansion come in, Fibonacci expansion 1.618, roughly around $493 per share level. Before that, we also had ABCD pattern completing around $420 per share level. So between these levels, we were anticipating some sort of a resistance for the stock to come in, and $420 per share level was broken to the upside by a fair amount, by about $60. But what we have seen since then is that this market or this stock has actually retraced quite a bit, not as much as a 38.2% Fibonacci retracement of this entire CD leg higher, but it appears that it might be getting there. So this is what we are watching in the weekly chart for the NVIDIA stock. The chance for it to hit the $500 per share level, the psychological level, it looks like it might not happen before there is further retracement in this stock. So the key level to watch will be the 38.2% Fibonacci retracement. If that level is broken to the downside, then there are some other support levels to watch for, but a 38.2% Fibonacci retracement is quite common in strong trending markets, and if it begins to get good support from here, then the strong trend to the upside, the chances for it to continue are greatly increased. So let's move to let's take a look at Apple. So the Apple stock, it has done this pattern formation where we don't know whether it's the top yet, but $200 per share level, roughly speaking, was a key Fibonacci expansion of this entire range. So 1.272 expansion. Also the this pattern ABCD here, it was 1.618 times this AB leg. So we had a confluence of two ratios coming together, and that is always a level that one should be watching because of the confluence of two Fibonacci ratios coming together. And what we have seen is this market pullback. So let me actually zoom in a little bit. And on Apple, we had done a specific video a couple of weeks ago, I believe now, and in that we had identified the levels. So on the weekly chart, one of the levels that we are watching for is $170 per share level. If the market, there's a good chance the market might actually reach this level, $170. It's only $7 away now. And if that is broken to the downside, then there are a few other levels that we will be watching for. But at the moment, it looks like $170. In fact, the 38.2%, 61.8% Fibonacci retracement of the CD leg comes at $165 per share level. So anywhere between $170 $165 per share level is something that we are watching for if this market continues a little bit lower. Then let's take a look at Tesla. So we have done a special video on Tesla, so I will not go into too much details about it, and I just recommend that you watch that video. I will put a link in description about it and also towards the end of the video. Let's take a look at Google. So the Google stock, it remains strong. The 78.6% Fibonacci retracement comes around $137 per share level. It's going into some consolidation at the moment, and there's a chance that it might actually hit the $137 per share level. One of the other things that I would like to point out is from the momentum perspective. Look, we have the 200-week moving average, which is the gray line. We have the 20-week moving average, which is the blue line. The price is above the 20-week moving average, which is above the 200-week moving average. From a momentum perspective, the stock is strong. Also, the really important support comes in for this stock around this level of 88, 89, roughly speaking, and that level is a 50% retracement going back all the way to roughly around 2014, even a little bit lower before that, so April 2014. And also we had the 61.8% Fibonacci retracement coming from these 2020 lows of March 2020, the COVID lows. And what we have seen is the market actually go through some accumulation here. There is a strong, nice trend line here as well, and the stock has performed quite well. But there is obviously a possibility that it might actually consolidate here. Still, some chance that it might hit the 78.6% Fibonacci retracement, but looks like it's going to consolidate here for some time, maybe even pull back a little bit. Let's take a look at Shop. So this is Shopify stock. This is e-commerce related stock, and what we have seen is this stock has actually come back and testing this trend line here, trend line support. Maybe this support will hold. We'll have to wait and see. One of the things we were watching for before this stock was that perhaps it could reach the $80 per share level, which is 38.2% Fibonacci retracement. It hasn't done that yet. And also, let's take a look at this on the daily chart as well. So on the daily chart, we have this nice channel going on, and what we have seen is that when this stock reach the top of the channel, some selling comes in, then towards the bottom of the channel, accumulation comes in, and now where we are at the moment is the price is broken below the channel, but it's very close to the 38.2% Fibonacci retracement. And what we have seen over the course of past few trading days, there is just not that strong of a downward momentum at the moment, but we'll have to keep on watching this. So anywhere between 38.2% Fibonacci retracement and where the stock is at the moment, there could be more some support coming in, and perhaps some accumulation, and the stock begins to move towards its upper trending line. And ultimately, what we're looking for is 38.2% Fibonacci retracement, roughly coming in around $80 per share level. Then let's take a look at Microsoft, MSFT. So the Microsoft stock is interesting because what it did was it formed this high, which I believe is the all-time high, and it just broke out of its trading range, and now it has pulled back into it, which is quite classic behavior, because most of the times the breakouts, they fail on the first attempt, and then what happens is that the price pulls back into the trading range, accumulation comes in at some point, and then on the second attempt the breakout is more real. But we'll have to wait and see. This is something which we had been pointing out. We have drawn this trading range. What we have seen is a breakout attempt, and now price pulling back into it, and is resting right at the 20-week moving average, which is above the 200-week moving average. So from a momentum perspective, the stock remains pretty strong, and also the price is approaching the 38.2% Fibonacci retracement. Let me actually draw it like this, which is about $10 below. So there's a possibility the stock might rotate a little bit lower. We'll have to wait and see how it's going to, what the price action will look like when it reaches the 38.2% Fibonacci retracement. Let's also take a look at it on a daily chart. So on daily chart, we had drawn this channel line, just like the Shopify. It has broken below the trend line, and we were watching for this $320 per share level, because of some structural support coming in here as well. The Friday's price action as looks like quite a bit of a fight between the bulls and the bears. It's really small body candle, and also very tight trading range if you were to look at it on a daily intraday basis. So it's roundabout in the region that we were looking at. And one of the things that we like to look at this is the concept of the market symmetry. So in this leg higher, we have had a correction of this much, and if we were to project this down, it was coming around till about $333, and then the bigger one had been this one, when this move actually retraced and started to move higher aggressively, and that comes around where the stock price is right at the moment. So this is the concept of market symmetry, and it's possible that from here the stock is likely to find some good support, and one of the other things is that the Fibonacci retracement 38.2% is coming at $310 per share level, which is roughly about $10-12 from where the market is trading at the moment. It's a good region where the market closed. The stock closed last Friday, in terms of market symmetry. So there is going to be some possibly good support coming in over the course of next few trading days for this stock. Let's take a look at Amazon. So this is the stock of Amazon. Amazon earnings came out a few days ago. The stock gapped up, and it was perceived to be a good earnings, and the guidance coming in was stronger from the management, so that was all good. But from a technical perspective, from a technical chart perspective, it has not been able to take this swing high out from the 16th of August 2022. And if the trend is likely to continue higher, this swing needs to be broken to the upside for it to have a new trend unfolding. Now, after doing that just by 1 penny, it's possible that the stock can go into further pullback, but again, it indicates a start of a new trend. So we haven't seen that yet, and this stock actually has been moving gradually higher and higher, grinding higher. Our price targets of about $120 were met and exceeded, so that's good. Let's take a look at it on a weekly basis. On the weekly basis, we have this 61.8% Fibonacci retracement coming at around $147 per share level. So there's a possibility that it actually might go and target that, which will in fact the highs for this 146.57. So if it goes and hit about $147, it would have taken this swing high out, which would be, in my perspective, a good thing for the stock. So this is what we are watching from a momentum perspective. The 200-week moving average and the 20-day moving average, 20-week moving average is below the 200-week moving average. So it is improving at some point. These moving averages, which these are fairly long-term moving averages, are going to catch up. And when the 20-week moving average crosses above the 200-week moving average, that would be a pretty strong momentum, change in momentum for the stock. So looks like things are improving for Amazon from a technical perspective. Anything else we have missed? So let's take a look at Roblox. So Roblox, this is very interesting. Let's actually take a look at it from a daily chart. So with one of the patterns that we were watching for in Roblox was this ABCD pattern. We were thinking that as long as this point C was intact, the stock would actually go and hit $56 to $60 per share level. Unfortunately, I believe earnings came around this day, and at that point has been taken out to the downside. Now what it means is that there is going to be a different pattern unfolding, and we'll have to wait and watch for some support levels. And if we were to just draw from here to here to see, so the stock is right at the 78.6% Fibonacci retracement, but it's just a retracement here. We have to actually find if there is going to be a confluence of some other Fibonacci ratios. We'll just try to quickly do that. Otherwise, the next video which I will do, I'll try to find that pattern. So here we do have a confluence of two things coming in. This is the 1.272 expansion of this swing here, and this one is the 78.6% Fibonacci retracement. So in fact, where the stock closed $29-30 per share level might actually be a pretty good support for the stock. We'll have to wait and see. However, this is a pretty big gap, and which just shows that a lot of selling came into it. So we have to respect that, and we have to respect this candle as well. Although this might turn out to be a good support level, we'll have to be cautious and wait and watch for the price action over the course of next trading week, in fact, to see how the market is going to trade for this stock. So this is what we are looking at in the key US stocks. Oh yes, one last one is the Netflix. So the Netflix, we were looking for this level of about $495 per share level. The market did not reach, but it came very close to it, $485 per share level. And there's a possibility that we believe that this pattern is in fact complete. And what is now happening with the stock is that it is just pulling back. There is a good chance that in fact it might pull back to around $400 per share level. We have the 38.2% Fibonacci retracement coming in at 410, and then we have from a symmetry perspective, $390 per share level. That is a pullback equal to this. So roughly we can say that maybe perhaps a $400 per share level might be where the stock might be going, and if it begins to break below that, then we'll have to reevaluate the analysis. And on a weekly basis, we have the 20-week moving average also hovering right around $390 per share level. Let's take a look at Meta. So Meta stock has been very strong. That's been good. And what the stock has done is it has gone and retraced 78.6% of its entire move lower. Now, something very interesting about this stock is that if you look at this level here, $85, roughly around $85-90 per share level, that is the 78.6% Fibonacci retracement. So it is the 78.6% Fibonacci retracement of its lows from after the IPO to the highs reached in 2021. So it retraced 78.6% of that. And now what the stock has done since October of 2022, so last year of October, it has gone and retraced another 78.6% of its entire decline here. This move, let me actually try to point it like this. This is 78.6% retracement. And isn't that amazing? Looks like this stock really likes the number in terms of Fibonacci retracement, 78.6%. So quite an interesting thing from a momentum perspective. A 20-week moving average is above 200, so that's pretty good. Now, if we were to just draw for a quick analysis, just a retracement, Fibonacci retracement, we have the 38.2% Fibonacci retracement coming around $235 per share level. So that's quite a fair amount below compared to the top, which was around 320. So roughly about $100 per share level, and that is what it is indicating. But look, the stock has been up quite a lot, and it's in how many months has just gone up and retraced 78.6% Fibonacci retracement. So a stock that can go up that much that quickly could perhaps also give back some amount quite quickly as well. So we'll have to wait and watch, but this is what we are looking at in terms of the levels. Here it is on the daily chart. We really thought that 61.8% Fibonacci retracement might be the point where the pattern might complete, but the stock had been pretty strong, especially on the daily chart. On the momentum perspective here, it actually went and retraced to the 78.6% level. So let me actually update this right here. Here we go. And now it's at a level where it might find some maybe perhaps a little bit deeper pullback, and we have on the weekly chart already seen the levels coming at 38.2% Fibonacci retracement. So I will do some more work on it on the daily chart and try to see if there is going to be any confluence levels coming in, but this is all for now for the meta stock and for the key um, tech stocks that we follow here. I hope you guys will like the analysis. Thank you very much for watching the video. Good luck and good trading.